Okay, for today's lesson number 4, I want to go back and talk about ETFs again. Remember, ETF is exchange traded fund, and it holds a combination of stocks. And I want to go over why holding more than one stock or basket of stocks is safer than holding an individual company. So let's go to remember finance.yahoo.com website, and let's look at this ETF, SGov. Actually, let's look up the one I said last time was a good dividend ETF. And it's being a little slow today. And remember, when you want to look at all-time price history, let's click on all here and wait for this chart to refresh. You can, and like I said before, you can see from back in 2016 to 2025 right now, the price has gone up. It went from low to high, which is what we want to see in a good ETF, this DIVO ETF that we want to invest in. And remember, I said 4.66. Look at the yield. This is a good yield for this. And um, this, I know if you go to, I already showed you this before, but if you go to seekingalpha.com and you go to Devo, not Devo, Devo, just click on that. And then I just want to go over to dividends. We're just going to use this website for dividends. If you look at dividend growth to look at all time, like 10 years, you can see it's pretty much gone up, or it hasn't gone down, I should say. And then as far as dividend history, if you look at the max, let's say, I mean, it's paid dividend ever since 2016. So, and in the last 5 years, you can see the dividends. It's paid price and dividend history here. This is the price in orange, and dividends are paid every, uh, tells you how much it's paid. Um, so that's what you want to see. You want to see good dividend growth over time, and this hasn't been around too long. So 2017 through 2024. So um, and let's go back to Yahoo Finance, and in the summary here, the other thing you should look at is the top 10 holdings. These are the top 10 companies that it holds. Um, and this is safe because it, you diversify across different companies. So if one company does bad, your whole ETF um, won't do bad. The other companies in its holdings will spread out the risk and be safer and won't go down as fast as a company that does poorly and it starts going down a lot, then um, that's not good. So diversifying across multiple companies um, gives you more stability and less volatility. So it won't go down in a crash, unlike one company that will crash hard. This will, if a company goes down 50%, since this one has multiple stock companies in it, then um, it won't go down so much. It'll go down less. Okay, so that's what I wanted to say about that. And then also what these ETF funds do is they have fund managers that manages this. So if they find that one company is not doing very well, they will either remove it from their ETF or they will change change the allocation in the portfolio. So they'll reduce the exposure to that company by reducing the percentage the of the money that they invest in. So that's another good thing because we have managers, the fund managers that run this ETF, if that will rebalance according to their rules for this ETF. So if a one or two companies isn't performing to their expectations, they will reduce the exposure or remove that company from this ETF. So that's another. So they're doing the hard work for you. So if you just invest in this ETF, you automatically get diversification across different companies, um, and you get fund managers that rebalance it according to the company's performances. So you have professional fund managers that maintain this. And I know from doing my research, Devo is a good ETF and they run this very well. So this is one to hold. If you buy it, you just keep buying it and you hold it forever. And it will pay you the dividends, 4.66% yield per year. And as you saw in the dividend history, dividend growth, um, they have been let me go to max here. Well, you can't tell from that one, but this outlier here is causing us, you can't really see, but the dividend's been kind of actually pretty consistent, a little bit. It's going up a little bit. So over time it goes up. So you not only do you get the dividends going up slightly, but you also get the price of the ETF going up over time too. So you when you buy low and when you buy something low and it's worth more, then you get capital appreciation plus you get the dividends. So this will grow over time for as you hold it for as you keep holding it, it'll grow in the price, in the capital appreciation, and the dividends will grow too, and you'll get more than 4.66% if you bought it lower. There are times like here in the COVID crash, the market will crash, like I mentioned before, and it will have a pullback and the price will decrease a lot. This maybe been like 20, 30%. That's okay. We know that's temporary. The market always comes back. The market, even during World War One, World War Two, the Great Depression, the market just has gone up and up and up after. And it recovers during all those catastrophes. It always recovers and it will recover and go back up. So we know this is a good ETF. Even during the crashes, you'll see a, a big drawdown in your account, but you just keep holding it. Okay. And that's what I want to talk about ETF rebalancing. That's the fund managers will rebalance those ETFs. And I've already done all the hard work and there's only these down here, these ETFs are the only ones that I want you to invest in, nothing else. Don't listen to anybody else. And let's talk about interest rates because I want to go over SGov here, which is the government bond. And if you just go to Google and you just type in uh, Fed fund rate, I talked about this today in our Zoom meeting. Um, the Federal Reserve sets the Fed fund rate, the interest rates for the country, um, depending on where the inflation is. If the inflation's high, then they're going to increase the Fed fund rate. The FOMC, the Federal Open Market Committee, they will. Right now, it's at 4.25 to 4.5%. But in the future, and what this means is SGov, which is another ETF. This is a 0 to 3 month Treasury bond ETF. And this is very safe. You just hold a government bond and they pay you basically the Fed fund rate of 4.5%, whatever the interest rate is right now for the Fed fund rate or the what the FOMC has set. Um, this is how much they will pay you for you holding this at holding this ETF. So it's very safe. It's like holding cash. So I want you. What I'm going to do tomorrow is I'm going to put all your cash that you have available into SGov. Buy SGov with your cash so that you can get 4.52% dividend yield. And they pay every month the dividends, and we'll hold this and use up all your cash and while I'm gone on business. And then when I get back, then we'll go back to our normal regular trading. So this is just temporary for us to collect money or dividends while I'm gone. So obviously, if the Federal Reserve or the Fed fund rate changes in the future, let's say the inflation is coming down, so then they'll reduce the interest rates down too. So let's say it goes down to 2% or below 2% or 1%, then it's not really worth owning SGov then because you're only going to get 2 or 1% dividend for SGov, and that's not really worth it. It's better to invest in other ETFs if that happens. But obviously, if interest rates goes up, which is a possibility, but I don't think it's going to go up. I think it's going to go down in the future. Then it's good to hold SGov because then they'll pay you a higher interest rate if they decide to raise the interest rates. But right now it's at 4.5%. And I think later in the year, they'll probably reduce it down a little bit. I don't know, maybe it'll go to, 3.5% or something. But it's right now it's worth it to hold it so you can get 4.5% dividends. Okay. And then that's how interest rates work for SGov um, and other government bond ETFs. But SGov is the main one that I want you to invest in for government bonds. And then I already talked about seeking off a website to look up the dividend growth and dividend history. Okay, so now let me stop share and I'm going to share the other screen. Okay, this is our Tasty Trade account. And right now the net lick says $157,788. But we need to know how much cash is in our account. So if you click on the balance, it'll tell you cash amount you have right here, 76,339. The other remaining um, the remaining funds you have in here, you have 157, right? So you have 157,000 total that this account is worth, but I'm using a lot of it by having these. I've purchased or opened these positions. I've purchased these things. So we own Amazon, 11 shares of Amazon. We own 167 shares of Bill. That takes up cash. So all these positions that we have takes up cash. That's why we only have $76,000 of cash left. Okay. But Bill is just another ETF, same as SGov. Okay. So this one pays the same interest rate and this one. So we have 351 shares of SGov. But tomorrow, what I'm going to do is take the remaining cash, well, almost the remaining cash to buy more SGov. I want to leave some cash in the account to maintain some options contracts that we have open. So we have two MES contracts. So we need to hold at least $1,000 for each contract. So we need to hold $3,000, $2,000 in cash to keep maintaining this position. So just know that's how much you need. Then I also have some SPY uh, options contracts that probably close out tomorrow, but for these, I want to hold at least a couple $1,000s for the whole SPY options here. So want to hold $4,000 in cash. Um, so let's just round it up to $72,000. So we only want to use $72,000 to purchase SGov tomorrow. And remember the math. Right now, SGov is $100.58. So tomorrow it might be like $100.59 or $100.60. So we'll use let's see, we'll use $72,000 to purchase SGov tomorrow when the market opens. Okay. Let's switch back to the other screen and I'll show you how we did the math. I know we already went through this, but we're going to use $72,000, right? And um, let's use a calculator. So maybe it's more clear on a calculator. Okay, so we're going to use $72,000 in cash. And tomorrow, I imagine SGov price will be around, well, 100.6. Okay. So we're actually going to purchase 715 shares, okay, of SGov tomorrow. And we'll hold that while I'm gone on business. So let's do some more math because right now we have, let me move to the other screen and bring up the calculator again. Um, okay, I said before we already have 351 shares of that, and we have 167 shares of that, right? So we're gonna buy another, what did I say it was? Zero point 0.6. We're gonna buy another 715 shares, but we have 351 already, so let's add 351. So we're gonna have over 1,000 shares of SGov. And what did I say? SGov paid in dividends. I said it pays like 35 cents. So let's say you had $1,000, 1,066 shares of SGov times 36 cents. So every month, SGov will pay us $384 if we hold it. Okay. And we also have 167 shares of Bill, which is the same thing. So we have $384 from SGov every month that they will pay in dividends, and we'll also have 167 times, let's say 0.36. I'm not sure exactly, but what bill dividend is, but let's just guess it's 36 cents. So Bill will also pay $60. So we'll get $60 from Bill, and what did I say the other one was? I forgot now. So it's I should have wrote it down. Let's do the math again. Okay, 1510 plus 351, 18. Was that right? Let me just do that again. We're going to spend 152,000 and we're going to divide that by 100. Oops. Yeah, 100.6. Yeah, that'll be 1,500 shares. Oh, sorry. It's cash, right? Cash was 72,000. I don't know what I was thinking. It's late at night right now. And we're going to purchase 715 shares and we have 351 also. So we have 1,066 shares times point, let's say 35 for the dividend. So 373. So let's let's write that down. let's say we have 373, okay, some dollars from SGov. That's $373 per month in dividends. Okay. And then for Bill, let's look up Bill is we have 167 shares of that, and let's say same as 35 cents dividend. So $58 for that. So $58 plus $373. So just by holding these two, Bill and SGov ETFs, we're going to get paid $431 per month. So that's good, easy money, right? And that's basically almost better than what we've been doing with MES trading, isn't it? So think about that. All right, that's enough. It's late at night. It's already 11:20 and I gotta get to sleep. I'm tired. So watch this one and ask me any questions if you have any questions, okay?